Hello, everybody. It's Aaron, founder and CEO of Grava Adventure Corporation, or GoGrava.com. Thanks for watching this today. This is we're going to be talking about maybe somewhat of an uncomfortable subject, but something I'm able to talk about in depth quite a bit. Now, before I get to that, which is the cycling industry, GoGrava.com has been open for 30 days. And I am absolutely amazed at the support we receive from friends and family with purchases. It was really comforting to see people that I knew or some people that I didn't even expect purchase just even a t-shirt from us. I know we're just starting out. We have clothing line and a brand, and we don't have all of our cycling bags in yet, but they're coming soon. And we haven't got the bicycle production yet. We're still working through bicycle prototypes, but it was amazing to see this and to see the support we got. So to everybody who bought something at GoGrava.com, thank you very much. And furthermore, I would say anybody who hasn't bought anything and you're a cyclist, I would pay attention here. Anybody who goes to our website, GoGrava.com, and purchases a founder shirt, you will have the opportunity to get something unique, because I have 3 types of bicycle bags that I'm prototyping. I got 50 each of those, and I'm going to offer them to the founders for free, shipping on me to test and prototype if you're interested. That's a frame bag, a top tube bag, either bolt-on or strap-on, and a tool bag to get your feedback. So if you want to be part of this process, and that's what the founders group is for, is being part of this prototyping process, and we're going to be openly sharing all of our experiences on this business journey since it just started with all of you. So with all that said, very grateful, because right now times are tough in the cycling industry, and they have been for some time. So let me get into that and tell you who I actually am and how does this guy even have any credibility to talk about this subject. And you're going to find out I'm pretty credible. So who am I? I'm a hobby economist. I was very interested in the economy and the stock market and the bond market since 1999, when we were in the dot-com bubble. And I really just kind of focused in on trading and things that were happening during that time. And I've been learning about it for 20 years. And so I'm well versed in finances, global finances, the bond market, Federal Reserve, all of those things that get pretty complicated. I'm also the former Chief Operations Officer of the Sufferfest. And if everybody remembers, if you're a cyclist, remembers Trainer Road, indoor cycling, used to play the Sufferfest videos. And then we had Reed Weber, who was a co-founder of Trainer Road, come over and join David McQuillan from the Sufferfest. And then that's when I joined the team. And we created our own training app, Sufferfest training app. And then we were bought out by Wahoo Fitness. And I helped with that transition over to Wahoo Fitness, and then took over as like a software product manager, cloud manager for Wahoo Fitness. Now, I did leave Wahoo Fitness. I ended up quitting Wahoo Fitness in April 2021 because I just saw some things coming up in the marketplace that just didn't seem like anybody was really paying attention to. And instead of like losing my job or getting fired, which ended up happening, Wahoo had to lay off a large portion of the software teams. I just figured I'd step out on my own terms. So when we look at things here, you know, some of the things, at least in the fitness industry, that I pay attention to specifically is Garmin. And Garmin's so important because Garmin just doesn't do bike computers or, you know, fitness watches and things like that. Garmin does GPS. Garmin has military and government contracts for GPS devices. They do aviation work and things like that. They have their own warehouse or semi-factory in the United States where they're assembling some of these things. And, you know, during the 2007 run-up, they had a big spike, and I was seeing something very similar after the 2020, you know, problems that we had. They had a big run-up, and I was like, this is not sustainable. I've seen this run-up before. And then when looking at the Garmin charts, I was thinking to myself, I was like, wow, this is probably all demand being pulled forward. And what happens when you pull all of that demand forward is you get this big drop off in demand afterwards. And you end up if you're not careful, overextending yourself in debt and overextending yourself in hiring and things like that, right? So the other one was Peloton. Peloton was another one I looked at. And then you see that second run up with Peloton, and the one before it, I noticed that all the executive teams were selling coming into the spring of 2021. Through the summer, actually, they were selling all their stock options massively, like $500 million of stocks this executive team was selling. So they knew something was up. They were cashing in while they could. And I was like, wow, this is not good. And then the next thing that I really pay attention to is the bond market. So here we see this spread. This is the spread, and this goes back to like 1980 or 82. This is the spread between the 10-year bond and the 3-month bond, right? And when it goes negative, it means your yield curve is inverted, and your 10-year treasury interest rate is lower than your 3-month interest rate, which is backwards. Because when that starts happening, people start pulling money out of banks and things like that because they can just invest short term for higher yield returns than investing long term. And so what ends up happening is I started to see the yield curve running up, but I knew it was going to come back down. I knew with inflation coming, because of all the money printing, that the Federal Reserve is going to have to move off its zero rate policy and increase interest rates and create a yield inversion. And when that yield inversion, like I swear to God, I think it's 100 out of 100 times or whatever it is, when that inversion starts to correct, like we were at 1.85 percentage points or 185 basis points, however you want to say it, inverted, when that inversion curve starts coming back up, that's when the recession starts or becomes near to start. And so that little line below there is kind of what my marker to see. Now it may come down, that little line I have, and it may get retested, but it's going to come up one way or the other. Either long-term rates have to rise or some sort of crisis happens and the Federal Reserve has to lower the immediate Fed funds rate, which lowers short-term rates. So I kind of see this disaster coming in the economy, and I don't think we're out of the woods yet, which makes it difficult to think about starting a company, right? Where you're like, wow, this is going to be bad. But my advantage is I can keep my overhead costs super, super low, knowing that the demand is going to be really low for these products. But if we can survive, if Grava can survive for the next 12 months, we're in a great position in the marketplace to build up after this downturn. That's probably coming in October. That's just my guess. That's just a guess. So what do we see then? We see, Wahoo went into Chapter 11 restructure of their debt, and they actually got it restructured. So good for them. I'm not rooting against anybody here. There's people I know at Wahoo that, I consider to be friends. I want them to be successful. It's a great company to work for, and I'm glad they were able to restructure their debt. But, Zwift had layoffs, and, we could keep going here. Specialized was laying off. I actually applied for a job at Specialized before I decided to start this company. And, they gave me a rejection letter, which was the only company that did, by the way. So thank you, Specialized. But, Rad Power Bikes, hitting their 4th round of layoffs. Pros Closet's been laying people off. US Cycling's been laying people off left and right, and even closing programs. So the cycling industry, or this outdoor industry, in a certain way, fitness industry, is kind of the canary in the coal mine for the overall economy. When the cycling industry, and you start seeing these fitness industries start to decline, they're just leaders. They're going to decline first and head down first because that's discretionary spending for the consumer. So it kind of shows the health of the market. And we had a lot of forward demand pull with all those stimulus and stuff, people buying bicycles and trainers and things like that. That is now gone out of the economy. And with student loan repayments starting back up in September, it's just going to be even less money in the economy to buy these things. So it's going to be a really hard winter coming up. But you as a consumer have a great opportunity here. Like Bike Direct, I think this is bikesdirect.com. You can buy a carbon fiber bike for like cheap right now. Motorbicane, cheap bikes. I mean, things are going to go on sale. Unbelievable sales right now. Like that's the one I bought for $5.99 that I'm testing now on my channel. But the things are really cheap because I still know people in the industry, And they're at 2 to 5 times inventory levels. These bike companies, like they're sitting on massive piles of inventory that they got to move. Even if they're just going to break even or take a slight loss, they have to move this inventory to rebuild up their cash reserves while they're laying people off. And, so it's like time to sell, right? And it's not just these companies that we're talking about just selling products, but there's a lot of smaller bike companies and smaller companies right now trying to sell their companies to investors. I mean, because they have to, right? If you're trying to sell your company to a prospective buyer, what are they going to look at? They're going to look at your revenue, how much money you're making, and the longer you wait and the lower your revenue goes, the lower the amount of money you're going to get for your company. And so right now there's at least 7 companies bicycle companies actively trying to sell to investors right now. And some are just going out of business. We're going to start seeing that. That was something in the dot-com bubble. I remember was quite a few bike suppliers were having issues from 99 to 2001. They had to sell or get picked up by investors. I know Schwinn had problems. Specialized had problems then. I think they got picked up by Merida to help with manufacturing. And this is just the way it goes when you head one of these down. When you go into one of these down cycles. So I do wish the best of luck to everybody. I am not rooting for this. This is not a great thing. I am invested in this too. I started a company and I'm going to try to survive because my thought process is if I can survive over the next 12 months with an economic downturn coming, I can survive any time. This will be the hardest time to make it. People are going to have a hard time selling bicycles coming up, selling bicycle equipment. And they're going to be steep discounts for the consumer if they have any money left. So we'll see. But that's 30 days. GoGrava.com has been open. Friends and family, fantastic support. Again, thank you so much for all the support we received when we opened the store. And now it's about marketing, keeping our costs under control, still innovating on products with the money that we have, and then getting that Founders Club built up so you can all help me test out this gear and material while we try to keep things in the Americas, right? Making it in North, Central, and South America the best way we can. So keep following for the journey. This is the business update. I try to do a business adventure YouTube presentation because I think running a business is as much as adventure as it is going on a 3-day hike or bikepacking or anything like that. It's quite the adventure running a business because it's exciting. There's nerves, there's uncomfortability there and things like that. So again, everybody, thank you. Bye.